Right, time to talk gold. One of the guys I used to work with, he was a gold bug. He worked on the interest rate derivatives desk. He used to say he had a diversified portfolio. He was long physical gold, long gold miners, long gold options, calls of course, long gold futures. That was his diversification. That's the thing with gold. You get people who just love it and think it's going to go up all the time for no good reason. I've been watching it this evening. This is what's been going on. It's just the last hour or so. It's kind of had a little break up. Just depending how you want to draw this, it could be that. Yeah. In any case, it's was kind of winding up. I guess you could draw it like that. But if you take out the outliers, which I kind of do when you're looking at these trends, it's had a little bit of a break up. So a lot of people are going, mate, it's off, it's off, it's off. Look at it, it's broken. There's been that trend there. Right, it's off again, another leg up, head to 1900, which it may well, but I'm a little bit skeptical of gold. The fat lady to me hasn't sung yet. When you look at it on a monthly, it hasn't broken the trend yet. When you look at it on the weeklies, I do tend to wipe out noise, particularly this kind of stuff when it's just had a big run up or run down, right? It's still forming lower highs. So the key level really is this around about 1900. If it breaks out, it could be quite a different story. But I'm wary of it for a few reasons, right? One of them is there's a few other big things moving in the markets which don't support a move in gold. One of them is the dollar index, which has broken higher. You can see it's kind of filling in a little bit of a gap there, but it could easily go, what's that? Could easily go from there to, like up here, right? Up to 100, right? You could easily do that. Depending on how you want to draw this, you could kind of, I don't know if I'd go as far as low as that, maybe like there. I don't know, where does that take us to? 98-ish, something like that. So it's the dollar index really looks very bullish, particularly with this pair of cojones there, the double bottom. It really is looking like it's off, and I'd say that level there, around about 100, is somewhere between 98 and 100. That's probably the target for it. That is not good for gold. The other one, of course, is the yields are on the move, particularly the short end ones, right? And you can see the last week they've ticked up. That's not well correlated with historically with a move up in gold, right? And you can kind of look here, right? Let's look at this date. 5th of November, right? What happened in gold on the 5th of November? Right, so this is when yields were at a high, right? On the 5th of November 2018, right? 5th of November 2018, where are we? Here we are, 5th of November 2018. Here we go, right? Big high in yields, gold starts its run up. Let's look at this date here. 3rd of August 2020, right? So all this run low to high in gold. What happens in the yields? Surprise, surprise, they go the other direction, right? So what was that date? It's like August, right? So the 1st of August or something, I think I was looking at. Down there, like it hits its low there, 3rd of August. So just as gold had a massive run up as those yields went down, right? Yields are starting to turn the other way, and that is not a favourable thing for gold. So that's the second thing that has. So there's a few things got reservations with gold. One is there's a lot of excitement about this move, but it's really not much in the scheme of things. It's a break of an important level, no doubt, but there are far more important levels which it hasn't broken yet. So that's one thing that I've got a concern over. The second one is yields peaked here, bottomed here, right? They peaked when gold here, and they bottomed here, and yields have started to turn. And they've started turning. We've seen weakness in gold as it started to turn. So that's the second thing, right? The third thing, of course, is the dollar index, right? Which is also related to yields, obviously. The other one, of course, is this pattern here. I think as I pointed out in some of the other videos, that's really the same. It's the same pattern that we've seen here, right? You know, back in the 15th of November, 15th of August 2011, and then the 1st of April 2013, when this whole pattern, right, finished. So this pattern is basically the same story as what's unfolding here, okay? Where we had, you know, the big high, fewer lower highs. That one certainly tested it, and it was just dribbling down, and that's really what's going on here. This one might come up to that level, same as here, right? It's remarkably similar. Big run up, bit of a drift, and then a bit of a plummet, right? Big run up, bit of a drift, and I guess the question is it going to go up or down? Obviously, right? You know, my money, like it's on a plummet. As I said, the dollar index is there. The yields, all-time high in yields, well, not all-time high, but a peak in yields, and an all-time low in yields here. Again, yields starting to come back. And here, let's look at the yields from 15th of August to the 1st of April. Right. Let's go back here. There we go. I'll just take it on. I'll put it on the line because it's a bit easier here. Okay. Right. Where was it? Where am I? 2011. What is going on here? Yeah, that August, 15th of August, right? That level, right? That level there corresponded to that all-time high, right? Just as this level here corresponded to the other high, right? Yields go down, hits a high, yields go down, hits a high. And the other one, that 2013, 1st of April, right? 2013, 1st of April, where are we? Right, there. They just started to tick up. So it's the same pattern, right? So we saw, just as yields came down here, right, we saw a big run up in gold to a peak. Okay, just as here. From here we saw a big run up in gold to a peak. Then when yields were like bumbling around the bottom, we saw that same pattern. And as yields started to tick up, this is when we saw gold drop from $1,800 down to like $1,000, right? Here, gold's lagged. It's lagged because of residual inflation fears. Now, I would argue that the reason, so that in itself to me says that the inflation that we're seeing now has already been priced into gold where it is, and the money that's coming into gold now is late to the table. So that's the other reservation I've got. Money coming in now on the back of inflation, but really the money's already been there in inflation. So here we've got record low in yields, record high at the time, record low in yields, record high at the time. Yields bumbling along at the bottom, gold drifting. Yields bumbling along the bottom, gold drifting. And here obviously as yields ran up here, this is when gold dropped. Right? That's what's going to happen here, right? The Fed is not going to let rates just sit around and do nothing. Okay, and where could they go to? They could quite easily go there. I mean, that's a very natural point for them to come back to. Even here is a very natural point for them to come back to. That's 50 points. That's not going to be fun for gold. And with inflation, if it does remain more than residual, then the Fed's not going, not more than transitory. The Fed's not going to sit around and do nothing. They're going to raise, and they're going to raise these rates, and they will start hitting these levels, like 2, 3, 4, 5% to rein inflation in. It's not like the 1970s when gold did well during inflation. The Fed's not going to let that happen again. So that's why I'm looking at gold and saying this is an interesting move, but what's really going to make it go higher? Inflation, sure. Arguably that's been priced in. What's the Fed going to do? They're going to raise yields. That is going to really destroy the gold price. So it's all very exciting times for people that are the conspiracy theorists on gold, because they're all thinking it's going to go higher. Call me a little bit contrarian. This has been a strong move. It actually, if you include that, right? Sure, it's broken, right? But again, these lines, you can draw them anywhere, right? Really, when it comes to it, that's the problem with some of these trend lines. For me, I do tend to wipe out the noise. And for me, that's noise, okay? These are some more fundamental levels in there. That's a bit more. That's a bit more. And to me, it hasn't totally broken through. It's certainly getting there, but the more important ones will be here. So that's just on 1920. And of course, these ones, 1955, and up here. You never know, it might happen, but I'm wary about being long and what the Fed's going to come out with as these inflation numbers unfold. Okay, all right, ciao.